General Electric is expected to sell off its mammoth finance unit GE Capital by 2018, beginning with the sale of its real estate division to Blackstone and Wells Fargo for a reported $26.5 billion. Now let's check in with Jim Corridore. He's an analyst with SP Capital IQ. And Jim, your reaction to the news this morning? Obviously, GE is trying to focus on its core competencies, right?
Yeah, we're very positive on the news. We think it accelerates the transition that GE is trying to make into a company that's much more focused on its core strengths in industrials and technology. And this is a big chunk of assets that's going out the door and should eventually allow them to be seen on the street as much less of a finance company, much more of as an industrials powerhouse that it is.
All right, now while this sale represents the bulk of GE Capital, what about the parts beyond its real estate business? Who's buying that?
Well, first of all, I mean, there's Synchrony, which is their consumer finance assets, which were all rolled into this company named Synchrony, which is going to be spun off at the end of this year, early next year. So that gets rid of those assets. And then there's still billions of dollars of heavy-duty consumer finance assets tied to industrials that will be either bought either piecemeal or maybe there'll be one large buyer that will emerge for these assets. It's undetermined at this point.
All right, now GE Chairman and CEO Jeffrey Immelt, who took reins at the company back in September 2001, and the stock actually has been down 37% since then. But he told CNBC this morning, quote, "This isn't a cycle, this is a generational move." He also said it will lower GE's risk. What do you say?
I agree with that. This is a once-in-a-generation shift of the companies. It was much more focused in finance, and now it's definitely more of an industrials powerhouse. I think that those type of companies tend to be rewarded on the street with a higher multiple than GE has typically got. And this is a move of the company that is a permanent shift away from finance that does de-risk the company. It takes away unproductive assets that have been sitting earning 1% interest for the last 10 years and allows them to take their cash that they're going to generate from these deals and focus them either on shareholder paybacks or on higher growth businesses.
All right, now you have a buy rating on the stock, right?
Yes, we have a buy on the stock. We do expect this transition to unlock a higher valuation for GE, and also we're positive on the industrial space in general.
Yeah, anything specifically you're looking at on the industrials front for GE in the coming year?
Well, certainly, obviously, most of the world is still pretty weak. U.S. is the powerhouse that's powering a lot of deals right now, but we do expect there to be some shift in Europe towards the end of this year, Asia end of this year, and next year looks pretty good for industrial growth, and GE should be able to capitalize.
All right, Jim, we'll leave it there. Jim Corridore, an analyst with SP Capital IQ. Thanks for joining us.
Thank you.
I'm Scott Gamm, and you're watching The Street.